And another nervy day on the local market. Earlier I spoke to Martin Lakos from Macquarie Private Wealth. Well, yet another slide on the local market. What's perpetuating the rot?
Yeah, Phil, we've had our seventh consecutive down day since Easter. And look, there's a number of factors driving this. Certainly the fact that the Australian dollar has been so strong, analysts are now starting to downgrade their earnings impact, in particularly on the industrials. So those exporters, those involved in property development, those involved in tourism are all being impacted. And so, for example, we've got zero growth for the industrial sector for this year, a recovery going to next year, but clearly there's some question marks on that. Now, it's all in the environment of a number of key regulatory issues starting to emerge, and also the fact that we're probably starting to see some overseas selling. So those investors holding $80 assets for over a year, they've seen the Aussie dollar appreciate from 84, 85 US cents to 109 odd.
The federal government's now granted a licence to Chi-X Australia to operate an alternative securities exchange. Plenty of conditions, though. Did we see any impact on ASX shares?
Well, in fact, no. The share price closed at 31.81. That's actually up 5 cents. The share price has been on the slide for quite some time. If you remember back, Phil, where the stock rallied to 43.80 odd in October when the announcement on the Singapore Exchange's bid first emerged, and after that, really the share price has continued to slide. It's now down 27% from that time and has in fact slid further since the Treasurer made his official announcement. So we certainly think that the Chi-X issue in terms of competition is being factored into that share price currently. In fact, the announcement by ASIC today was very much about all the paperwork that's involved before granting that licence. So it's quite detailed, a lot of conditions, but all these conditions are really about the legal conditions being met, should I say.
And how's the market reacted to the news from Coca-Cola Amatil's annual general meeting that there are bigger profits ahead?
Yeah, look, Coke at the annual general meeting came out with some guidance. It does look like they're seeing some market share gains, which is good news. It looks like profits and volumes are up about 5%. It's not all good news. Their food services business looks like it's got a negative contribution for the last 4 months. But on the whole, you have to say it's a pretty solid outlook driven by Coke at this stage.
And Martin, I can't let you go without a forecast. Where does the market go from here?
Well, not so much a forecast, Phil, although I have to say that most strategists are still looking on a 12-month basis for the market to be quite substantially higher. I think we've got about a 5,100 sort of level on the ASX 200, and that's probably towards the end of or the lower end of the range by other analysts. With the market now at 47.37, it's dropped about 3% or just under 3% since the beginning of April. Certainly from a valuation perspective, the market's on average PE of about 13.5 times, an average yield of about 4.5 times, and the earnings growth is still pretty solid. So it's not a valuation issue. It's all about, as we mentioned before, why the market was down today. There's some outlook on the earnings that's concerning the market and some regulatory issues obviously coming up that I think will continue to impact. If going forward, depending on the reporting season coming up post 30th of June, that's always a driver of the share market. We are expecting to see the market head higher into the second half of this year.
OK, Martin Lakos, thanks for your time.
Thanks, Phil. Always a pleasure.